On Skype with us right now, of course, is Michael Lebowitz, CFA, of course, our portfolio manager at RIA Advisors. So, Mike, yesterday, the chairman of the Federal Reserve, Jerome Powell, up on Capitol Hill, making the case for potentially cutting rates at the end of this month. Now, interestingly enough, he didn't say he would cut rates, but he did lay out the case that the economy is weaker and that there are certainly some concerns here from both tariffs as well as looking at some of the global economic data that warrants potentially the Fed being a little bit more accommodative towards easing rates if necessary. But again, didn't actually say he would cut rates, but the markets are pricing in about 100% probability right now of at least one rate cut by the end of this month. What was your takeaway from yesterday?
Yes, he didn't say that he was going to cut rates, but he said everything possible to allude to the fact that they will cut rates. And I think really what it comes down to is, are they going to do 25 or 50?
Right.
Right now, the market thinks there's about a 33% chance they do 50. It was priced at 100% a week or two ago, and it was 0% right before he started speaking. But you know, the interesting thing about his speech was, the Fed's two mandates are inflation and employment, right?
Right.
And employment, as we've talked about, there are some weaknesses. But look, the unemployment rate's at a 50-year low. Jobless claims are near a 50-year low. And inflation has been in the same range that it's been in for the last 7-8 years. So it's good news on the employment front, and there's nothing new on the inflation front. Yeah, it's slowing a little, but it's still well within the range of what it's been. But he harped instead on things like Brexit, on the federal debt ceiling, on trade, and things that, yes, could happen and could affect the economy at some point in the future. But he really harped on those.
Well, do you think do you think he was harping on those because he's trying to build a case to maybe comply with the White House's wishes to cut rates? I mean, Donald Trump has been all over. Jerome Powell has threatened to fire him, threatened to demote him, a whole variety of issues that he should be cutting rates and we should be more like China or the ECB in terms of, stimulating our economy with more liquidity and lower rates. Was this basically Jerome Powell trying to not seem like he's being affected by politics by coming up with all these other excuses outside of their mandate to cut rates?
It could be. I mean, he's certainly trying to justify a rate cut when it's not obvious to a lot of people, ourselves included, that we need a rate cut. So whether he's doing it to appease the president or whether he's doing it for other reasons, I mean, it's quite, he has a lot more information than we have. Mm-hmm. For instance, he has the CPI report in hand. He has probably some sort of decent estimate of GDP, which we're not going to get for, I think it's a week from now, maybe right. 2 weeks from now. So he has information that we don't have. He also knows that a stronger dollar is crushing some of the other world economies, notably China, emerging markets, but also Europe to some degree. And Germany is, even though it's not official, will be in a recession. It's hard to see how they avoid it at this point. So it might be that the other central banks are leaning on the Fed to cut rates, which would weaken the dollar and would help their situation a little bit.
Well, but that's kind of an interesting byline that you bring up there because, Judy Shelton recently talked about how, all these other countries, they're cutting interest rates to basically manipulate their currency so they can get an unfair advantage to the U.S. in terms of trade, exports and imports, et cetera. And that's a terrible thing. That they're manipulating their currency, and even Donald Trump has said this, that these other countries are manipulating their currency to gain an unfair advantage on the U.S. But then we turn right around and say, well, it's not fair for you to do it, but it's fair for us to do it. We should lower our rates and lower our currency values so that we have an unfair advantage on everybody else. That doesn't really make sense.
No, it doesn't. It's a lot of nonsense, and that's what Powell's speech was. Is a lot of nonsense. They know what they want to do. They have a reason why they want to do it. What that is, we may never know, but it's clear and it's obvious based on not only what he's saying, but what pretty much everyone at the Fed is saying, that they need to cut rates.
Well, let's talk about this from a different angle. Look, they're trying to come up with a justification to cut rates. Now, when we normally are cutting rates, we generally see several things historically speaking, right? We're seeing weaker deterioration in economic growth. markets are already potentially starting a decline or in a decline to some degree. And when you get into the real breadth of cutting rates, and you're cutting rates fairly aggressively, you've generally been in a fairly deep recession and a fairly deep, bear market at that point. Now, one of the advantages of cutting rates and providing stimulus to the market is that you're helping, when there's a point in time where there's a lot of pent-up demand, right? People have, take about 2008 as an example. Markets are, terrible. People are convinced the world has now ended and we're never coming back. And so, this stimulus hits the market and it works fairly well. And I was talking about this a little bit yesterday, is that if you have a fire that's now just a bunch of smoldering embers, the fire's still there. And so if I throw lumber on it, I can restart the fire, right? And I get the best bang for my buck at that point. If I throw more lumber on a fire that's already raging, it may make it burn longer, but it doesn't get any hotter than it already is. And it seems to me the Fed may be making a policy mistake here by using what limited amount of ammunition they do have in terms of cutting rates, to try to just keep the fire burning longer, although it won't burn any hotter at this point.
Right. Well, let's think about it. What's the benefit of lowering rates? It's to encourage people, corporations, the government, in theory, to take out more debt. Mm-hmm. So individuals are already having issues, and all the Fed is going to do is bring mortgage rates back to where they were a couple of years ago. Auto loans are still basically near zero. So yes, they'll get rates a little lower, but they're not going to get a much lower like they were able to do in 2008 or 2001 or every prior recession. They're just going to bring them back to where they were a couple of years ago. Right. Corporations, as we've discussed, Lance, corporate debt to GDP is the highest it's ever been. There are more companies that are rated BBB now than there ever have been that are on the verge of, or potential verge of being downgraded. So are they really going to take on more debt and potentially push themselves into junk territory? And the government, while Trump would love to spend money to boost the economy, the House is going to have none of that. And, they will not do anything to help the president. So even if you lower rates, who is that going to encourage to take on more debt and to spend, take on debt and to spend the money to help the economy?
Well, and that's a good point about the government too. We're about, and again, this is something I think has been completely under the radar as of late. It won't be for much longer, because September the 1st is when basically the new fiscal year for the government begins. And October the 1st. So between September and October, the government's got to come to grips with their budgets for next year. We won't obviously have a new budget. We'll have another continuing resolution. This continuing resolution will push the national debt well north of $24 trillion. It's also going to push the national deficit in excess of $1 trillion, probably pushing $1.5 trillion. And to your point, I think there's going to be a point here that even conservatives, conservatives completely, after the election of Trump, completely abandoned, their ideas about fiscal conservatism. For the 8 years of the Obama administration, Republicans railed on, the spiraling of the national debt and doubling of the national debt and the increase in the deficit. But as soon as Trump's elected, apparently that doesn't matter anymore. But I think it's going to be even difficult for conservatives to continue to spend with reckless abandon at this point when you're starting to push $1 trillion, $1.5 trillion, $2 trillion in a deficit.
That's right. That's right. And the other thing, and we noted this in a recent article, that U.S. citizens, be it citizens, pension funds, endowments, all types of funds, corporations, are now responsible for funding 100% of debt because foreign countries are not buying more of our debt. So the funding has to come internally. It's not coming from the rest of the world. And that means that money is coming from somewhere else, from some other investments.
Well, yeah.
It's crowding out potential investment that could be more productive.
Right. And again, one of the big fallacies is that, when we did these tax cuts, that was going to increase, revenue to the government because of stronger growth, et cetera. That didn't happen. And now we're seeing almost 80 cents of every tax dollar coming in just paying the basic coverage of interest service, interest debt service, Social Security, Medicare, prescription drug benefits, et cetera. I mean, there's only 20 cents of the dollar actually going to non-mandatory spending or what's termed discretionary spending. And that number is going to continue to increase. as the economy does begin to slow. So, I mean, there's a real risk here that in the course of the next, few years, almost every cent that comes in terms of tax revenue is going just to fund mandatory spending, which is really going to start to push our national deficit to much greater degrees. Quick break. We're going to be back with Michael Lebowitz right after the break. You're listening to the Lance Roberts Show right here. Get by our website, realinvestmentadvice.com. Get our latest report on employment, as well as get our YouTube, subscribe to our YouTube channel, get all of our videos. We like I said, we've got this interview coming up next week with Jerome Powell. It's a great interview. You can also see all of our live streams for the show, our 3 minutes on markets and money, everything that we produce. It's all there for you at our YouTube channel. Simply go by the website, realinvestmentadvice.com. Get subscribed today. We'll see you right after the break.
Lance Roberts blog. It's required reading for the informed investor. Catch it today on LanceRobertsShow.com.